Well, welcome everybody to our January team meeting. This meeting we're going to talk about taxes with Jeniele. She works at the Idaho tax group in Nampa, and now that it's just about tax time, we're thinking this is the perfect time to get a little rundown, and she's the expert, so hopefully you have something to take notes with. If not, we can get you something. Did everybody sign in for the drawing? Hopefully. Have four.
Your odds are good tonight.
You might better go home with a couple.
And any recruiting journals? Probably not. Okay.
On-time price?
Yeah, let's do an on-time drawing.
And keep your ticket.
Well, I don't think I'm going to run through too many announcements, being that they're all on the news tab, and we can just hop on there. But there's definitely some promotions this month. We have Bring Back My Bar, double half-price rewards, and a very special join this month for you get free shipping on your starter kit, and you can earn up to $300 in free products. So definitely a lot going on this month, so check it out. I will pass it over to Jeniele. Thank you so much. And awesome. Yes.
Well, I was thinking that maybe I should do a more intimate setting, because this is like a small group. Look, I mean, we would all rather be in Cancun.
Yes.
What are we doing here?
So sorry, I wish we had more.
Other than hacking. So normally I have bigger groups, and so this is great, because what I think is, rather than kind of go through the generic talk, maybe what we'll do is just have a more intimate discussion about whatever you guys want to talk about, because you probably have most of you have heard my spiel. Most of you have heard the generic tax talk, and if you haven't, that's okay. We'll talk about whatever you want to talk about. So I will give you a little bit of background about me, and then we'll just have an open discussion about anything. Since there's not that many of you, we'll just talk about whatever it is that you might have questions about in your own businesses or taxes or things that you want to put out there, and I'll be open forum tonight. How's that? Is that good? Okay. So, yes, bless you. And I'll try not to hack the whole time. I've been trying to get that chest cold. So, like Christy said, my name is Jeniele Rowley, and I'm with Idaho Tax Group, and I am an accountant and have been practicing since 2001. So, it Well, seems 13 like, years. Yes. I can't do that kind of math in my head. Years.
I'm so used to calculators.
Exactly. And I have a lot of Scentsy clients. I did my first little presentation when Heidi and Orville had their little office, like, was it right over there? Yeah. And it was a big warehouse open room, and Becky was in the front row, and they said she was sitting there, and somebody said, I hope I can make $2,000 a month, and because Becky said, I just made $2,000 a month. And it was like a big deal, and you know, we were talking about Scentsy consultant numbers, and every year I've gone and we talked about, you know, we always talk about consultant numbers, and you know, I remember, you know, somebody was like 500, and it was so exciting, and you know, and then somebody was like 3,000, and it was like so exciting, and then somebody's like 127,000. I mean, I don't even know what number. Who's new? Who's new? Somebody. Are you new? Who's new?
She's sort of newish. What's your number?
What's your number?
What number?
What's your consultant number?
353,277.
353,277.
Yeah.
See,
And
we're
that's
getting
awesome.
close to 4.
Yes. Yeah. So that's great. So lots of Scentsy clients, and I think it's a great business for you guys, and so I think that I don't work Scentsy, but I know a lot about Scentsy, and I love Scentsy. I love what you guys do, and I think it's a great business for you. And so with that being said, I have an office that I am the single accountant, and I have 1, 2, My husband works in the office with me, and then I have, right now, 3 employees, and I just hired 2 more for tax season. So, you know, a handful of employees, and we have a bunch of little kids running around because my staff brings their kids to the office with them, and we're family oriented, and it's great. I love what I do, and I love helping people, and you know, so here I am. Let's talk. So, does anybody have any questions about Scentsy in general? Yes, she's like, I have a whole bunch. Let's go. What do
I'll
you
just get
got?
to you on the side. I heard it a lot.
That's all right.
This is actually my first year filing.
Okay. All right.
Scentsy.
Okay.
Are there any suggestions that you have for me, things that I should be, other than the obvious expenses and stuff like that I should be tracking?
Well, let me just tell you, I don't know that there are obvious expenses, because what is obvious to some people is so not obvious to somebody else. I have people come into my office and they say to me, if I pay you, can I write off that expense? And I say, yes, and I'm like, that's so obvious to me, but for some people that's not obvious. So let's just talk for a minute about maybe some of those expenses that you can write off, and because what is obvious to me is not obvious to other people. And so we'll just start there. That's a good place to start. I have this little handout. It's, I call it my bookkeeping envelope, and it gives kind of a generic list of things that are deductible. And it's not designed for Scentsy, it's not designed for any business, but kind of a generic list. I give it to anybody that's in business, and it's really designed to stimulate you when you're looking at it, because it's what I would think are the things that are obvious. Accounting. If you pay somebody to do your taxes, it's deductible. If you pay someone to help you with your books, any type of accounting services are deductible. Advertising. If you use Google AdWords, if you have advertising, if you buy business cards for your advertising, if you print flyers, that's advertising. If you pay
Like an ad
ad
in
in
a
a
school program or something.
school program, ad in a kid's directory, any kind of advertising, something that gets your name out there, or marketing. Let's talk about technical terms. Marketing, advertising, whatever you want to call it, it's all the same. Yeah. IRS isn't going to nitpick you over words. Yeah. Car, auto, same. You know, they're not going to, those kind of things, technical terms, they don't care about that, okay? So whether you put it under marketing or advertising, it's all the same. Bank fees, something that people tend to miss. If you have a business bank account and they charge you a monthly service fee, or they charge you a fee if you go over a certain amount of transactions, sometimes those things are small, but nobody ever misses if they have a pile of, or a puddle of oil under their car in their driveway. But they miss if their oil is leaking while they're driving along. Nobody ever misses when they buy a big expensive something in their business, but they miss $5.95 a month coming out of their bank account as a bank service fee. They don't miss the big things, they miss the small things. So bank service fees. Your Square, you know, if you take Square, if you have a merchant account, those fees. Sometimes, I should know this, but I don't know this. I don't know if Square, when they issue your 1099, if somebody pays you $100 through Square, I don't know if Square gives you a 1099 for $100, because Square puts $97.25 into your account. So I don't know if Square gives you a 1099 for $97.25, or if they give you a 1099 for $100, and then you have to account for the $2.75 in fees that they charged you. But you should know.
And you can run a handy dandy little report on the
Right.
website from Square.
Right.
And print it out.
So, but don't miss it.
Right.
Don't assume that because your 1099 says one thing that they've accounted for the fees. So bank fees. Gifts, let's talk about gifts, because this tends to be something that messes with people in Scentsy. Okay. On my little envelope, I have two lines here. When you buy a product, okay, so up here is for, let's say that you buy your bars, and you put the bars that you bought up here, okay. Down here is a line for gifts. Okay. So if I bought a bar up here for $5, and then I turned around and I gave it away, would I put it down here too?
You can't claim it twice, is what you're trying to say.
Yes.
You count it in as inventory and don't worry about it.
Right. If I wrote it off up here when I bought it for $5, and I wrote it off down here as a gift when I gave it away, did I spend $10 on that bar? No, but I was trying to write it off here, $5 when I hear, $5 when I gave it away. That's $10 in deductions. I didn't really spend $10 on it. So if you wrote it off when you bought it, you don't write it off when you give it. Okay? Mental note, ladies, that happens a lot. They're like, but I gave it away at my kid's school, or I gave it to somebody. Yes, but you wrote it off when you bought it. Gifts is like, I bought a basket. I bought the basket to put the Scentsy stuff in. The basket was the gift. The basket is the gift because I've already paid for the Scentsy bar up here. So a gift.
Can you write that off as a supply though?
Yeah, you can.
Okay.
Again, it's going to go back to that same thing. Marketing, advertising, tit for tat. Whether you put it in as a gift or whether you put it in as a supply, it's going to have the same net tax effect. It's still going to bring your expenses down. But it's on here. Just make sure you're not double dipping. So if you're giving things away, gifts, marketing, advertising, interest. If you happen to use your credit card to buy things for the business and you don't pay it off and you incur interest expenses, that's deductible. Not personal interest, but interest related to business purchases. Let's talk meals and entertainment. That's on my list. If you have meals and entertainment, you invite somebody to lunch to talk to them about Scentsy, meals and entertainment. You have to be able to say who, what, when, where, and why. Okay? Let's say you host a party. You buy the food for it. Good. Deductible. All of it. That's great. I am out running around and I forgot to bring my lunch, or I don't have time to go home, and so I use my business card to buy lunch. Not deductible. You know, just because I use my business card doesn't mean that it's automatically deductible. You have to be able to say who, what, when, where, and why. Office supplies, same thing. Small stuff, don't forget, pens, paper, notebooks. You all have them. You're all using them. Make sure you're keeping track of them. Postage and delivery, website. Go ahead.
So would your suggestion be just keep receipts and write notes on the receipts?
Absolutely.
It's probably the best.
Yeah, yes, absolutely. Those little notes on those receipts. Plus those receipts fade.
Yes, they do.
They sit in the window.
You're like, go ahead and audit me.
That's exactly right.
Right there.
That's right.
Right there.
The pen. I've actually been to an audit where the receipt is faded and the writing is on the receipt and they've taken it. You know, they're actually pretty fair. If you're doing your best, they'll take it. Okay, not if all your receipts are faded, I'm sure. But go into the big box of receipts that are all faded, but you know. Here you go. That's right. Guess.
Oh, I'm sorry, I left water before you got
That's
here.
right. That's
But
right.
Jeniele, you can only count for half of your meals, right? It only
Yes.
counts for half.
Yes, but you don't have to, I always tell people, like, you don't have to worry about taking the half. We worry about that on our side.
Okay.
Or, you know, I'm assuming nobody does their taxes by hand anymore. The software counts for the half of the
Oh,
meals.
okay.
Yeah,
So in other words, give you the full price and you'll figure it
exactly.
from there?
Yeah, yeah. The other thing about meals is you get a per diem. Let's talk about traveling meals. If you travel out of town, which if you go to convention, where's convention this upcoming year?
Missouri.
St. Louis, okay. So if you go to convention in St. Louis has a per diem rate. I don't know what it is off the top of my head. The standard per diem rate is $46 a day. That covers your meals. Whether you spend $46 a day or not, the IRS doesn't care. You are allowed to deduct $46 a day for your 3 meals a day. You don't even have to have any meals receipts. You just have to be able to prove that you were in St. Louis for a certain amount of days. You just have to show that you flew to St. Louis on Wednesday and you flew home on Sunday. And you get the per diem for, they don't care if you stayed at your grandma's house. They don't care where you stayed. You get a per diem for the number of days you are there.
Now, are they gonna take half of that, or?
They do take half of that, but still, I mean, really, unless you're someplace very expensive, you very rarely will spend $46 a day. Go ahead.
So in the past years, have you done that calculation for us, or do you
Yeah.
take the number that I
No, I
give you?
do
Okay.
calculations for you. Yeah.
All of a sudden, I'm like, crap,
No, we
amendments.
find out where we are. Yeah. Go ahead.
So is that just meals, or is that per diem equals just meals, or hotel also?
No, per
No.
diem is just meals.
So you can also.
So you have lodging
You
on
take
top
your
of that.
lodging, your actual lodging, so so if you stay at your grandma's, you get nothing for lodging. But you do get $46 a day for your meals. I see which why we say, where are you at?
And is it, so like if Paul and I both go for convention, it's 46 per person?
Yes, yeah,
Because he's a business partner?
Yeah.
But if I took my kids, they would not be the
that's
partner.
exactly right, exactly, yeah, exactly.
But can you write off the whole lodging?
All the lodging, yep,
Okay.
46 per day per person. So, all you have to do is track where you are, and then there's a website where you can go on and find out what the per diem is. You can just Google search it, per diem website, and it'll tell you what the per diem is for the location that you're at. And you can even check the dates, because some locales get higher based on the time of year that, like the Salt Lake during the Olympics, the per diem was a lot higher because they knew things were more expensive that time of year.
So do they do it by city or by state?
They do it by city.
Okay.
In Idaho, the only place that Coeur d'Alene has a higher per diem rate, Sun Valley has a higher per diem rate, every place else is like $46. Seattle has a higher per diem rate, LA, metro areas has typically higher per diem.
You can type it in by
Areas.
zip code too.
Yeah, yeah, Hawaii. higher
Change my
per diem.
numbers for last
You can
year.
look outside the United States, Oconus, you can look outside the continental United States, you can look up Alaska, Hawaii, you can look up London, we can look up Cancun. It's over there. Although if your trip is covered, it will allow you to take a deduction there. So if somebody else is covering the cost of your trip, you can't take a deduction for that.
It's considered income though.
They put it on the 1099.
Oh, yes, if you put it as income, you do get to take a deduction for that. Yeah, so if it's reported to you as income, like some of those trips are, yes. But if it's not reported to you as income, say your employer is just covering it for you, you don't get to take a per diem deduction for that. Okay. Let's see, supplies, telephone, let's talk telephone for a minute. Especially since nowadays telephone tends to be a one-stop, everybody's got one phone anymore. I found that, so first of all, they won't allow you to take your home phone at all, ever, never. Even if that's your business phone. It says right in the IRS code, no home phone. Just, they don't. Even if it's your fax line, they won't. But with cell phones, as long as you're fair in your ratio, I found that most auditors will allow you to take whatever ratio you choose, as long as it's fair and you feel like you can justify it. So last year I went to audit and the person put 80%, and the auditor was like, fine. They didn't even really question it. I think if they'd put 100%, they would have said, really? But I think as long as you're fair in your ratio, as long as you're not trying to put your kid's phone on your business, you'll probably be okay. Really, in our area, our auditors are not that bad. They really aren't. As long as you have done your best to be fair and document what you're claiming and not be a jerk when you go in, they're great. They really are. They're just. I won't admit it if you ever said it. You should turn the camera on right now. Our auditors aren't bad here. They really aren't. They're fair, and they're not. I've been to places, I've been to conferences where I hear other accountants talk about their auditors in their areas, and they're really bad. But our auditors here they're fair. So as long as you have documentation of what you're claiming and you're honest and you're fair, you're not going to have any problems. So as long as you're not cheating, you're going to be okay. It'll be fine. You shouldn't worry about them. That's the least of your worries, is having to deal with them. Because if you use an accountant, you never have to deal with them. You just pay your accountant and they go, which makes it better. So those are some of the obvious things. Anything that you felt like wasn't obvious? No, it was all
Probably
obvious.
the bank fees, or I have Pay Anywhere, I don't have the Square, but
Yeah.
that.
I'm assuming they have fees though too, huh?
Yeah.
Yeah, all of them do. Does everybody use some kind of swiper now?
Most.
Yeah. Square? Do you find the fees are pretty reasonable?
2%.
Anybody take checks anymore?
Yeah.
I love them.
You do? That's because nobody bounces a check to you?
I only get like maybe one bounce check a year.
Okay, well, that's pretty
It's
good.
not bad at all.
Yeah.
See, I've been doing 8 years, I think I've had maybe 2.
Okay, well, that's
8
good.
years.
It's not bad.
Yeah, that's not bad.
Can you explain the income with the checks and cash?
Yes, let's talk about income. Because it's not as clear cut as it seems to be. So you have two sources of income from Scentsy. You have your commissions, which come on the 1099 from Scentsy, and then you have other income, which is your party income. So the IRS views any time you get money written to you as income until you prove that you have expensed it in some sort of way. So when you have a party and you use Square, where does that money go? Into your personal bank account.
So it's considered income.
That's considered income until you turn around and show that what do you usually do with that money? You purchase their product. So the income comes in and the product is the offsetting expense, and so the difference is whatever the little bit of profit is. The problem is that a lot of times there's a misconception within Scentsy consultants that their only income is their 1099, their commission, because there's no markup on your product, right? Right. You don't ever mark up your product? That's not true. You buy product in bulk. You buy product and you don't pay $5 a bar. I know it. I've seen your books.
It's so true. Don't deny it.
Oh, you mean like if we buy a 6-pack versus
Yes.
versus
Oh.
6 separate bars?
When you enter it in as a party, you not only get free shipping, but you also get it in a 6-pack, and you apply it toward the hostess discount, plus you know, all this stuff. You got it for way less price than you just sold it to that lady for $5.
Yeah. You have a markup. Don't fool yourself. You're not fooling me. You have a markup. I know technically there's not a markup, but there is in actuality a markup on your product. because of the various incentives that you have, which are free shipping, buying 6 bars and you pay $4.25 or whatever the price is after you buy them in 6 packs, and then you get your discounts and whatever it is. So the reality of it is that that bar never, hardly ever costs you $5. So
basically, you're writing off what you paid for inventory.
right,
But if you get, you know, a $100 check from a customer who ordered 4 6-packs or whatever,
right,
you claim the $100 as income,
Right.
correct?
right. But
Yeah,
then
so-
whatever you actually spent on their product, which might only be $72.50, the rest of it is your profit.
Right.
And so that becomes the part that you have to pay tax on, the $28 or whatever,
But if
you
you're
know.
just keeping track of the two, it
Right.
automatically works its way into those numbers.
Right,
To where you
right,
don't have to think about it that hard.
right, exactly. That's
Question,
exactly
though.
right, yeah.
Will that show, because I know you get taxed when you make more money, so with a higher income, higher taxes. So when you're claiming this money, is that showing your income as way higher than it actually is?
Well, I mean, it's
Okay,
not
because it'll
really.
bump us up into a higher bracket, saying that we're getting these checks.
Okay,
You know what I
but-
mean?
But you're also, you're gonna turn around and use the expenses. You only pay on the net, which means you only pay on after your expenses come off.
Okay.
So,
So it won't really raise you into a
no,
bracket, and
no, no,
then in your actuality, you're not really there.
no, no,
Okay.
because you get to take off all of the expenses, and so if somebody paid you $100 and you spent $90 on their product,
Then your income's only going up $10,
Yes.
not 90.
yes,
technically.
exactly,
Okay.
exactly. So you might see a high number here.
Yeah, initially,
Right, but at the end, you only see the
Okay.
$10.
Yep.
And that's what you pay tax on, is
Okay.
the $10. But, you know, if you're unprepared for it, which sometimes people are when they come into my office, and I say, where's your other income? And they say, what do you mean my other income? I say, well, you had parties, right? Well, yeah, but I didn't make any money on those parties. Well, I'm kind of sure that you did. No, I just bought product with that. I know you did. I know how it works, you know.
If I'm your upline consultant, I know you did.
So, you know, and really, you kind of have an obligation to the people that you are bringing in as well, to explain this to them. I mean, you need your downline to understand as well. I mean, that's part of your job when you bring in somebody else, is to help them understand what they need to keep track of as well, so that they're doing it right too. Nobody wants anybody else to have problems, or don't set somebody up to fail. Help set them up so that they know what to keep track of. Okay, just keep track of your parties. If they go on, I don't know what this process is, but if they use a credit card and they go right to the Scentsy website, or if you enter it right on the Scentsy website, that never even comes to you. So you don't even have to keep track of that, because that goes directly to Scentsy. You don't have to worry about that. What you really have to worry about is a check or cash that comes directly to you, or a square. Something that would go directly to your bank account. Because if you have an audit, what they look at is, let me see your bank statements. And then they go through and they would maybe add up all your deposits. And they would say, okay, your deposits were $12,000. Where's that $12,000 on your tax return? Well, I don't know. Well, I mean, I didn't put it on there. I mean, I spent $11,000 on product. Well, you have to show the $12,000 as income and the $11,000 as expenses, you know, and there's my $1,000 of profit. Okay? All right, cover the income
In addition to your
good?
1099.
What's that?
In
In
addition
addition
to
to your
your
1099, exactly. Okay. All right, other questions? You got it all down pat?
So for someone that's brand new,
Okay.
that might be worried about taxes, what's the best advice to give them? Is because just, it's really, don't worry about the tax stuff, worry about the tracking.
Yeah.
Don't worry about percentages and
Oh.
what you can and what you can't, just keep track of
Just keep
what
track
your
of it.
expenses are.
Yeah, yeah. No, I think I think for most people, the most important thing is, I have people come in and they say, oh, I need to go start a QuickBooks and I need to do all of these fancy things. And I say, you know what? The most important thing you can do is find something that works for you. I don't care if I get it in a QuickBooks or if I get it on a spreadsheet or I get it in an envelope or I get it on a green ledger. I get things in a variety of ways. I think the most important thing that you can do is find a system that works for you that is accurate. The most important thing you can do is get a system that is good for you to track what's happening in your business. You can't make good business decisions. I don't care what business you're in. I don't care if you're a contractor, a daycare provider, a Scentsy consultant. You can't make good business decisions if you don't know what's going on in your business. You can't. You can't make good marketing decisions. You can't make good purchasing decisions. You can't make any good decisions if you don't know what's coming in the door and what's going out the door. And as businesses grow, it becomes more critical that they make good decisions. The more money that comes in, the easier it becomes to spend money. And we think, oh, whatever. You know, if we always spent our money like it was our last dollar, we would spend it differently. But the more money that comes in, we never spend it like it's our last dollar. We're like, oh, fine, whatever. What's that $100? It's not a big deal. But if you treat your dollars like it's your last dollars, you will spend it better. You will spend it wiser. You will look at it better. And you will make better business decisions. So whether that means you get a good filing system, whether that means you use QuickBooks, whether that means you use Excel, whatever you're most comfortable with, the best thing that you can do is get a system that works for you for tracking those things. Okay, I'm going to put all of my sales receipts in this folder. And once a month, I'm going to go through and add up all my sales receipts because I want to know what my sales were for the month. And then I'm going to compare those sales receipts to the next month. And I'm going to start a spreadsheet because I want to see where the ebbs and flows are. Do you guys know when your busy time is? I know when your busy time is. Do you guys know when your busy time is? Have you seen those trends? Do you know those trends because you actually have seen them or because you just think you know when those trends are?
They have really cool reports now that Scentsy
Yeah,
gives
I
us.
was gonna say.
There you
Scentsy
go.
shows them to us.
Okay,
Graph
but
and everything.
Yeah.
I mean, whether
Pretty
Scentsy
cool.
shows them to you or you know what they are, don't those reports mean something to you? Don't you use those reports to plan something? Like, okay, I know Bring Back My Bar is coming. And things happen when Bring Back My Bar comes around. I know when, what's the thing that happens in like October, November? Something happens. What is it? Isn't there some promotion that happens?
Are you thinking when the new catalog comes out in September?
Yes,
And everything
maybe.
goes 10%
When the
off?
holiday flyers come out.
Yeah, no, I thought there was some
We
promotion.
just they did a new one this year, the Monster Monday.
It was just in October.
Okay, so, I mean, there's things that happen, and you plan around those things. And you're gonna find when you start tracking your books, and those are big things, those are big Scentsy things, but even in your own individual businesses, you're gonna find trends. You're gonna find trends. You're gonna find that if I use Shasta soda, or if I use name brand soda, that people buy more at a party where I use Coke instead of Shasta Cola. I don't know. I mean, you're gonna find trends. When you start looking at small things, you will find trends. And that's how successful businesses are formed and grow. Let's face it, that's what people do. That's what businesses do. They look for small trends and then they hone in on those trends and they say, oh, this works. Okay, if I spend a little bit more on shrimp, people buy more at my party. If I do this, Google AdWords, I'm getting more hits here. Whatever that trend is, and I'm not saying that those are things that necessarily work or don't work, so don't say my accountant said go buy shrimp at my party. Okay, I'm saying find those things, and I'm saying the way that you find those things is by looking at your books and analyzing what you're doing and finding trends. Like, why was that party more successful? What was it about that? And it may take you a while to figure out what those things are. And maybe luck of the draw. I mean, you might just have a great party. But you have a fabulous company that is, and that's what they're doing all the time too. They're rolling out things and they're saying, that didn't work so well. We're gonna try something different. That worked great. Okay, we're gonna roll with that. We're gonna run with that. And that's how successful businesses do things. They look at it, they run with it, they go with trends, but they're always looking, they're always analyzing, but they have systems in place so that they're analyzing and monitoring it, and they're not ever letting anything go by the wayside. They're not waiting till the end of the year to put their books together because they can't. They can't wait till tax time. They can't wait till tax time to do their books because then they've missed a whole year's worth of data. And you can't really wait till tax time to do your books either because then you've missed a whole year's worth of data. And that's, you've missed it, you know? You know, I don't care if you wait till tax time. I get my information, whether you wait till tax time or whether you do it all year long. You know, I get the same information, but you don't. You don't get the same information. And that's where it becomes important and critical. Go ahead.
Sorry.
No, that's great.
A couple things. Can I do a couple door prizes?
You bet. Oh, you bet.
And then I would like, if you don't mind covering mileage.
You bet. I'll talk mileage.
Okay, got your tickets out? Ends in 130 and 132.
Winner, chicken dinner. There you go.
Who's our 130? Yep, awesome. So anything off the windowsill there? Help yourselves. Go for it.
All right. So this year, 2014, the standard mileage rate is 56 cents a mile. So every business mile that you drive, 56 cents is deductible for that mile if you choose the standard mileage rate. So you have two options for vehicle deductions, but you can't flip-flop back and forth. So if you have a lot of repair bills one year and you opt for actuals, you can't say, oh, this year I'm taking actual and next year I'm going to go with mileage. For a vehicle, once you've chosen, you can't just flip-flop back and forth. I would say 95% of my clients use the standard mileage rate, especially because in your situations, you probably don't have vehicles that are exclusive to your business. You have vehicles that you're running your kids to school in and you're running around personally and you're running around for your business. And so my advice to you is to get a mileage log, or there's apps on your phone where you can track your miles, which is great. So let's talk about a couple things, misconceptions about miles, which is if you have signage on your vehicle that does not make your miles 100% deductible. Does not. You still have to track what vehicle miles are personal and what vehicle miles are business. So don't think just because you have put something on there that you would get 100% of those miles. You would have to show that legitimately that was a business vehicle. The other thing is if you put signage on your vehicle, you would need to be sure that you had adequate insurance coverage, that you had commercial insurance coverage. You would need to notify your insurance agent that you had commercial insurance coverage, that the business owned that vehicle and that it was being used for business. But outside of that, be sure that you have some kind of mileage log, although they'll allow you to recreate it. And if you're delivering product, that's usually not that difficult to recreate it because you have addresses, you know where you're going. Yeah, yeah. Don't forget though that you can track your miles going to the bank. You can track your miles going to the store to get stuff for your party. You can track miles going to,
Post coming here.
yes, coming here. You can track miles going to your accountant's office. You can, I mean, there's lots of, you'll find that you drive a lot for your business, even though you don't really think you're driving a lot for your business, but you probably are. I mean, going to Office Depot to pick up your supplies, going to drop that basket off at your kid's school, going to deliver those Christmas gifts to your downline, I mean, all of those things are going to be miles that are going to be deductible for you. So make sure this is a good time because we're at the beginning of the year. You need to have your total miles for the year, so business and personal, and you need to have your business related miles. So on a tax return it says how many miles did you drive total and how many miles did you drive business related. So those are the two numbers that show up on a tax return. And 56.5 cents a mile, you know, that's great. Yeah, 10,000 miles, you're talking about a $5,600 deduction on, you know, almost $500 a month. I'll take it. That's good. Go ahead.
What if you have two different vehicles that you've been driving?
That's okay. I mean, really, they're going to want to know the same thing. They don't care how many vehicles you're driving, as long as you say, this is how many total miles I had on the vehicle, and this is how many business miles I had on the vehicle. They don't care if you have 10 miles or 10 cars listed on your tax return. As long as you can answer those questions, they don't care. Because we have 3 vehicles at our house, and I guarantee you, every one of them has been to the federal building, to the IRS office multiple times this year, and that's what it is. Whoever's going, whatever vehicle's available at that time, that's the car that I drive, and so it's just a matter of, they don't care what vehicle you're driving, as long as you have a log that shows this is the vehicle I drove and this is how many miles I put on that vehicle. If you happen to take actuals, they're still going to want to know your miles because they have to know the ratios. So if you drive 20,000 miles in a year and 10,000 of it is business related, they have to know those things so that they can say, okay, well 50% of your actual expenses are business related. Actual consists of the depreciation on the vehicle, the gas, the repairs and maintenance, the insurance.
That's if you're writing your vehicle off.
Right, exactly. So those would be the
Can't do
actual
both.
expenses. Can't do both.
So
Yeah.
you can't do gas, like say I traveled to Seattle for a show.
No,
Can't do the gas that I spent to get there and the miles
No,
that it
no.
took to get there.
no,
Okay.
one or the other. Which, like I said, 56.5, or 50, it's 56 this year. Last year was 56.5. 56 this year would be more than enough to cover that. If you get in a rental car though, so let's say you flew to Seattle and you had a rental car, that actual cost of that vehicle, the actual gas in that vehicle would be deductible. That would be different. So we're talking about miles in your personal vehicle. You wouldn't get to take the miles in your mom's vehicle. So if you were driving someone else's vehicle, you wouldn't get to take those miles. Go ahead. No.
Well, I just moved here from Pennsylvania.
Okay.
Now, that wasn't like since he asked me to come out here, I just moved out here, so
Okay.
does that count at all? Because I had all my personal supplies with me?
No.
I didn't think so.
It was a nice try though. Did you move here for work?
No, I moved here because of the military, so they didn't have a choice.
The military didn't move you here?
They did, but I transported, like I drove here with my Scentsy stuff in the back because I didn't trust the movers to not destroy it.
They give you an allowance? They
Um,
most of the time give you an allowance.
For my
Military?
husband, yeah, for my husband, he gets it, yeah.
Okay, well, they should have covered it. The allowance probably covered it.
Covered the travel.
Yeah.
Yeah.
Oh, well, then there you go. So they wouldn't let you deduct it because you were reimbursed anyway. Yeah. I'm open for all of those questions. Like, you will ask those questions and I'll be like, yes, let's go. We'll try to get everything we can.
But not on that.
What'd you say, Mary?
But not on that.
Yeah, not on that one.
What
Alright,
are
go
the
ahead.
things you need to track on your mileage log? What do you need to write down?
Usually the date and where you went and how many miles it was. Some people have very detailed, like this was my beginning miles and this was my ending miles for that time. That's great. That would be ideal. I've gone to audit with miles that's just like 12.5, like, and I've been fine with that too. I think it depends on the auditor. So, you know, I think if you went in, I've gone in with like a map, Google Maps, where they've just said, yeah. I mean, I go to a board meeting in Twin Falls, and that's what I do. I just print the Google Maps and I stick it in my calendar for the day. I don't write down my 62,412. I just print the Google Maps and stick it in that calendar, scan it, PDF it. So.
What if you do like several things throughout that day? Like you go to the post office, and you go deliver an order, and then you go, I mean, I know you'd only count it all as one trip, but do you need to list every single address that you go to?
Nah, I just write like post office, Target, whatever,
That's what I've done. Okay.
12 and a half miles. I mean, they would be so impressed if you had a mileage log. They probably would allow whatever you gave them. They really would be. Because they don't see that very often. They're so happy when you come in with documentation.
If you are running Scentsy errands and somewhere along the line you stop to pick up a kid from school.
We won't tell them that.
Okay.
I don't know. I mean, really.
So can you put in, because like the app it asks you for a description of what you're doing and then your beginning and your ending miles, and then it calculates it for you. So if I put Scentsy errands.
Yeah, that's what I put.
That's enough.
Yeah. I mean, really.
Your kid was on the way home anyway, so you had to go back to the house.
He was running alongside the road and I just opened the door.
Tuck and roll, baby, tuck and roll.
I go back to, you know, we're all trying our best to be fair. We're all trying our best to obey the
1.2
law.
miles ain't gonna do you any harm.
That's right,
you know?
exactly. So.
Chances are you forgot that one time you went to the store anyway. So
That's exactly right. There's going to be some give and take on all of that. All right. Other questions? You guys are all down pat. You already started your books. You're already ready for tax season. I already have like a half a dozen business returns in my office ready to go.
Oh my God.
I know. They reconciled and they were there. Like ready to go January 2nd.
I just don't want to think
Are
about
they
it.
Scentsy
all I need
consultants?
is a 1099.
They're not Scentsy consultants. But I'll have some Scentsy consultants next week, I guarantee it.
Mine are done. I just need 1099.
Well, Jeniele, this is for you. Thank you so much for doing the meeting.
Well,
with
thank
you.
you.
Nice.
I have a little cute little red Gracie-Devil person there.
Well, thank you so much. It was awesome.
And
there's snacks in the back.
You're great. And I have, these are the bookkeeping envelopes. I have them up here. You can take them. They're my non-computer bookkeeping stuff. And, you know, like I said, it's more of it's an envelope, so you can put stuff in it. But it's really more for stimulating you to think, okay, this will remind you, like, what I can keep track of. And I have some cards up here, and you can take that, too. I didn't put it all out. I should have been, like, more professional. Like this. I have little calendars. Cute. They have tax day on it. I decided next year when I make them, sometimes when people come in my office, I say, wait, let me do this. And I go up and I circle a date. And they say, what's that? And I say, that's my birthday. Like, I say, okay. So I said, next year when I send them out, I'm going to circle that.
Yeah.
And then they'll call and say, what's that date? Like, it's circled on there.
It's a
That's
very
my
important
birthday.
day.
Calendars up there. Some of you might have already got those.
Yes.
So, anyway, no, thanks for having me come in. You can call me anytime.
But just in general, we keep track of expenses that we incur because of our business. So especially for new people, that's kind of how I always, because of Jeniele, was thinking about it. Now that I have this business, what additional expenses am I incurring because of it? And
Yes.
so that's kind of how you think about it. And that's helpful for me, at least.
What about your kids?
Oh, yeah, let's talk about your kids.
I put my kids to work a lot.
You can.
I call from my regular day
Yeah.
job and go,
Yeah.
a Scentsy box come in? Yeah, okay, labels are on the printer, print them out,
Yeah.
and have everything labeled before I get home.
So, you know, you actually can pay your kids.
Okay?
You can, and you should. Let me tell you, you can. I have 4 kids, and they come into my office and they work, and I pay them, and it is a legal tax deduction, and I am all over that. I really, really am. And you can pay them. Now, I have a son who's 18, okay? He can earn $6,100 without having to file a tax return. Do you know how much money he earned last year? $6,100. Because that's what he can earn without filing a tax return. And he can work, and he does. I am a huge believer in paying your kids. Now, I have a 9-year-old. Do you know how much she can earn without paying a tax return? $6,100. Do you know how much she earned last year? Like $480. I wanted to pay her $6,100, but I couldn't bring myself to do it. But she marks X's on a paper for me, and she gets like $10 every time she does it. And so, you know, so be realistic about it. Don't pay your 2-year-old $6,100. They really can't earn that much. You probably get a letter from Social Security saying you paid a minor a lot of money, but you can pay your kids.
How do I track it?
You should write them a check. So
Okay.
here's the things with paying kids. In reality, you should write them a check.
Okay.
Okay. You should issue them a W-2. You really should. You do not have to withhold any taxes from that W-2. You do not have to have any withholding. You do not have to report them to Department of Labor. You do not have to do anything, but you should issue them a W-2 because it is a record of those wages. And so it shows up. And if you have an accountant, they can help you issue those W-2s. If I'm your accountant, I can help you issue those W-2s. But you should do those things because it validates that what you're doing. And so every year that number changes for how much you can pay your kids without them filing. And if you haven't written them a check and you've been paying them, I'm okay with that. You probably should still issue them W-2s. But if they're working, and they should be, and if they are, that's a completely legal tax deduction for you, and you should take advantage of it. I'm a huge advocate of obeying the letter of the law, and I'm a huge advocate of saying nobody is obligated to pay any more in tax than they should. So if there's a reason that those things are out there, and you should take advantage of them. I'm not a conservative accountant. If there's something that's a deduction, there's a reason it's a deduction. There's a reason you're allowed to pay your kids. Let's pay those kids. Let's put them to work. We do not need lazy kids out there.
So is
we have enough lazy kids.
Is $6,100 a good, is that the same amount for this year? Like
No, it's gonna go up just a little bit. It's probably like $6,250 or something. I mean,
Okay.
it's the standard deduction for a single kid. But that is for all, like, their complete earnings. So if they have a job someplace else and they earn $1,000, you don't want to pay them the max and have them earn a job from another job, because then they have to. And all I'm doing is saying I don't want them to have to file a tax return. So I mean, they can earn more than that, but it just means they have to file and probably pay taxes. So.
And for those of us who have been doing our own taxes forever.
I'm sorry for you.
Me too. I really enjoy it, but my husband's not really enjoying it.
Okay.
He's not enjoying the, oh my God, it's October 15th.
Oh.
Because that's when I file.
Yeah. Me too.
I take
I feel your
every second I can and be like, oh, I guess I'll do taxes today. And then I know I'm missing stuff because I'm running around like a chicken.
Yeah.
Do you ever do like initial consultation to talk about,
I do.
because there's a few things on here that you guys said that I went, excuse me?
Yeah.
I've been doing this for 3 years and I didn't know that shit.
Yeah.
So, uh-oh.
Yeah.
And then what is it normally, a ballparkish figure, you do a lot of Scentsy people. So what are accounting fees to do someone's tax return with all the schedules and things that you need to file?
Okay, well, we should talk privately. But everything that I do is by the form.
Okay.
And so it just depends on, everybody in this room would have a different fee, because if you're married, if you're single, if you have
Right.
a obviously you're all gonna have businesses, but if your spouse has a business, if your spouse has wages, if you have college credits, if you have, you know, whatever, right? So
Okay.
we can talk for a few minutes afterwards, so I can know a little bit about that.
Okay.
because
Great.
I'm not the cheapest in town, but I'm not the most expensive in town, but I'll tell you, I'm a good.
But she is
I'm a
very
good.
good.
That's right.
Go ahead.
I just thought of something else that
Yeah.
people might want to know about, and that's your in-home office.
Oh, yes, you're right. That's on the back of my envelope here. I should stick to the envelope. That's my good old standby,
You
but
put me on camera.
let's go back to the other side. How are we doing on time?
What time is it?
What time is it?
Thumbs up. What time is it?
Yeah, we're about 55 minutes, so
Oh,
it's
man.
near 8 o'clock.
Okay,
It's about another 3 minutes. Have fun.
another 30 minutes. No, we'll do this one. We'll do this side quick. Okay. So, on this side, here's 2 things you should know over here. Over here, well, there's 5 things. 3 things. Okay. Down here on this side is a place that tells you how long you should keep your records. People are always asking me how long you should keep your records, so this year I decided I would put that on here. So if you want to know about keeping records, there's a little box down here. Up here is a place about assets. This is something that people often ask me about. If you buy something that is more than $100 that has a life of more than 2 years, so this would be desk, computers, printer, iPad, anything like that. Do not double dip. Over here, office supplies, pens, papers, small things. Over on this side. On this side, assets. The reason that those have to be listed separate is because these things have to be depreciated. Okay. Used to be, there was some a little bit of leeway on the amounts of this. IRS came out with some guidelines and they said $100. So if you buy something $105 and it's going to last more than 2 years, you're supposed to depreciate it. Various items have various depreciation rates. So a desk is supposed to be 7 years, furniture 7 years, computers 5 years. So you'll list it, the date you bought it, how much you paid for it. If you're bringing it to the business, so if you're new to the business and you're bringing a desk to the business, it would be the day you started your business and the fair market value or the purchase price, whichever's less. So if you have a $500 desk and you bought it 5 years ago and it's worth $300, you're going to put $300. Okay. So assets, you need to be mindful of that because they have to be listed separately on the tax return. Office and home. Okay. IRS says it's supposed to be used exclusively for business. I've never had an office and home taken away, even though maybe their kids do their homework in there. But IRS says it's supposed to be used exclusively for business. So I'll tell you that's what they say. You're supposed to take the total square footage of your house. So let's say your house is 2,000 square feet, and you have an office that's, I'll do easy math, 10 by 20, 200 square feet. Therefore, you get 10% of all of these various things, which would be if you rent, you get 10% of your rent. If you have a mortgage, you get 10% of your mortgage interest, 10% of your property taxes, 10% of your utilities, 10% of your repairs and maintenance. So all of those things are listed here. You would put them in your tax return as in full. You would put them all in full, and then the software then calculates the 10%. But there's a deduction for your office and home. Don't forget to include, say, storage. If half of your garage is full of Scentsy inventory, that becomes part of your office and home. Or even, 100 square feet of your garage. So there's a place that says your total square footage, office square footage, and storage. So that's something that people sometimes miss because they think, okay, well this is my office, but if you've got stuff business related that's stored in your house, that also becomes part of your business use of your home.
What if it's in an off-site storage unit?
Yeah, then the rent of that off-site storage unit becomes deductible. Or you're talking about like,
Because I do have some of my Scentsy stuff in a storage unit
Well, so that you rent?
that I rent.
Okay, well then the rent of that storage unit becomes deductible.
Or
A percentage of it?
the rent. If it's, she's
Oh,
only
yeah.
taking
Oh,
a
yeah,
corner
yeah.
of it.
Yeah, if you, yes, so whatever the percentage, so yes, if you're using 10% of that storage unit or half of it or whatever it is. If
Okay.
you're using all of it, then all of it becomes deductible. Yeah. Okay. Other questions on office and home? What else I got on the back there? No. What's I got on the front? Looks good. The other thing you should keep in mind, just for future reference as your businesses grow, there's a time and a place for entities. Lots of Scentsy people get there. Lots of Scentsy people get there. Keep that in the back of your mind as your Scentsy business grows. There's a time and a place for an entity, whether that entity is a limited liability company, an S corporation. Those things are all things that you should be keeping in mind. You don't want to miss that when the time comes.
When does the time come, and what's your recommendation for when is it time to consider that?
Everybody's a little bit different because it depends on their individual tax situation. Somebody with a lot of kids, the time is a little bit later because their tax situation doesn't necessarily justify it as soon as a single person, maybe per se. Scentsy's not a high liability business, so sometimes it's more advantageous to go into those things when there's liability issues. Scentsy's not high liability, so it's more about tax. When is it a good tax time? So it's kind of individual. I don't have a good, I usually would tell somebody if your profit is more than, say, 15 to 20,000 is when you would start looking. Not it, but then it would depend on your tax situation. Okay. Any other questions? You've been good at stimulating all of the things that,
I've been asked
this open
numerous
forum, I was like,
times.
eh, I
I've
should
been
have.
asked numerous times. I also was an assistant to another consultant, and
Uh-huh.
she is terrible with her tax stuff. So I had to kind of set up a system for her, so that's why I kind of got myself on a monthly system, and I know all that stuff, so.
That's good. A monthly system is good. I would like to get more people there, you know. Preaching to the choir. You're already all there. All right. Thanks for letting me come in.
Thank you.
Thank you.
Yeah.